Good day, fellow investors. I've made a deep analysis of Baidu, the Chinese search engine, with a lot of other opportunities. And in this video, I'm going to give you the detailed analysis and explain why it is a buy. In summary, there has been a margin call of 20 billion in Asia that pushed down the stock price of Baidu and other stocks by about 25%. It is the dominant search engine in China. It is investing in artificial intelligence, cloud growing at 44%, autonomous driving, L4, Robotaxies, its ARCs, technology and autonomous drive ETF, third position. So there is a lot of interest. The stock price has crashed, as I said, because of the margin call, and there are a lot of interesting investment, also value investment opportunities, because the company has 25 billion in cash on the balance sheet, which is 33% of the market cap. Let's start with the analysis. We'll do first the stock price analysis, then we'll discuss the business, the financials, the sum of parts valuations, the earnings model valuation, and then conclude with the investment thesis. If you like and you get value from this video, please hit that like button. Just a short note, as Baidu is a Chinese company, a few months ago I made an analysis of Alibaba, and today the news broke out that Charlie Munger invested 19% of his daily journal portfolio in Alibaba, so you might want to check that video too if you're interested in Chinese portfolio exposure, which is what we discussed in the latest Bridgewater analysis video. All the videos that I mentioned in this story will be in the links in the description of this video, so you might want to enjoy that for more value. Let's start with Baidu. So since listing on the Nasdaq, the stock did really well. This is more than a 20-bagger over the last almost 20 years, but you can see that there are periods of exuberance, then long periods of negative sentiment, exuberance, years of negative sentiment, exuberance, negative, bit of exuberance, very bad negative on stagnating growth, and now as the company expanded into EVs, artificial intelligence, and that became hot over the year, the stock exploded, and we recently had this small tech crash and China crash, but then we had the margin call crash that crashed the stocks another 23%, which created an opportunity, and now we are already seeing a little bit of a recovery there. If we take a look at ARCs, autonomous technology and robotics ETF, we can see Baidu here, 5% of the portfolio and third largest position in the ETF. So also Cathie Wood is bullish on Baidu. I have seen some price targets of Asian value investors, and they see Baidu at 360, 370 as a price target. So there is 50% upside in Wall Street terms. And also if Cathie owns it, then she sees more than 15% growth from the business, from the opportunities there over the next 5 years, which also represents an opportunity. If I can get Cathie Wood upside and a margin of safety, cash, free cash flows, then that is a value investment for me, because you can get the good of both worlds, and those are usually the best investments. Let's dig deeper into Baidu. On the short term, Archegos Capital Management, the CEO and founder Bill Huang, that was prohibited from doing business with big banks, but due to the big fees they took him in again as a client, and now as tech stocks crashed, forced him to sell more than 20 billion of his position, and that crashed the stock. Other stocks that I'm going to look through this week, perhaps make a summary video or some more detailed analysis on the most important stocks, are the above. So very interesting technical crash opportunity, because when there is a margin call, there is a technical crash, not a fundamental crash, and that's very important to keep in mind. Also, for the stock perspective, given all the mumbo jumbo going on with American listings, Baidu has hedged itself and created a Hong Kong listing, ticker is 9888, so you have to see whether you want to buy it in Hong Kong or the US. I don't think there will be too much trouble there, but you never know. Just a note, in Chinese numerology, 9 stands for eternity, longevity, and 8 stands for success and wealth. Good tickers for Baba and Baidu, so perhaps also a reason why Charlie Munger bought, because he certainly likes eternity, longevity, and success and wealth. On top of everything, Baidu owns a lot of other things. They have listed the Netflix of China. They have 56% of iKiwi, or however it's mentioned, and it is a volatile, it is a loss-making stock for now, but so are many of these growth opportunities. If you can get this for cheap, then it is an opportunity. Okay. And we also have seen some short seller reports on this. We'll discuss that in a moment. In short, if we look at the business overview, we have the Baidu search mobile app ecosystem. They are trying to transfer the traffic from the search into a larger Baidu app, a big app, not a mega app like Tencent, but they are working on that. They have, as mentioned, the Netflix of China, investing strongly in cloud, the leader in cloud in China, and also in intelligent driving, autonomous driving, and robotaxis. They recently acquired YY Live for 3.7 billion, which in short is the YouTube for Chinese scantily clad girls. There are also some short reports on this, but if they can incorporate all the views, the targeting, the traffic of this into their app, it could be a long-term benefit, and a lot of analysis that I read are seeing this as a positive. Even if the numbers for YY, and we'll discuss the numbers in a moment, haven't been that great. This is a nice summary. Most of the charts I'm using are from the recent Baidu Hong Kong listing prospectus, because when you look at the 500-page prospectus and when they do a listing, they're required by the exchange to really publish all the details of the business. So when you have a prospectus and you go into that, you really see a lot of details, and from there I have also made the basis of this analysis. And if we look at what they are, first search engine with 72.5% of the market in China. They are also doing other apps, now acquired YY Live. They have Baidu Wiki, Baidu Knows for questions, and they have about 544 million monthly users for their app, which is really a significant number, and more than 70% of users are logged in daily. Then they have other products and services that they are developing, a lot of options, and one of the examples is artificial intelligence and cloud. Other is intelligent driving with Apollo, Robotaxies, and there are other growth initiatives like smart devices, health, chips for artificial intelligence, chips, etc., from maps. So a lot of growth opportunities with Baidu. One of the concerns for Baidu of the past years, and when the stock price was in a negative, let's say, environment, was that the search engine will not grow, that actually others will develop a new search engine, a better engine, and that it will take market share from Baidu. That didn't happen. Others didn't manage to develop and take market share, so Baidu still has 72%, and that is stable, which increases the moat over time. The longer you hold a strong position, the bigger your moat is, and the more difficult it comes for others to take advantage of that. And that's also a game changer for Baidu, as it has that stronger and stronger moat. Also, if we look for advertising online, the market is expected to grow at 12% over year, so more than double over the next 5 years. And if Baidu can take advantage of that, that's also means that the core cash profitable business that is now will likely double over the next 5 years. Just that is already Katie Wood's 15%, and the rest, what you get, is for free then. Talking about the rest, the top company with artificial intelligence patents in China is Baidu, followed by Tencent, Huawei, and others. So they are really investing and have been investing for a long time in artificial intelligence, Then cloud services, the market is expected to grow at 37.2%, more than triple in the next 5 years. Baidu is also doing really well there with more than 10 billion renminbi in revenues, so if they can triple, that's already a significant new contribution to the revenue mix. Of course, one of the big investment theses is something that you might call a free gift with Baidu. So if you read Peter Lynch's book One Up on Wall Street, one of the best ways to get exposure to these hot trends is to get the hot trend exposure for free. So you have Baidu, you have the search engine core, cash flow profitable, that we'll discuss in a second, and you get all these options for almost free. So you don't have to pay crazy valuations, you get it for free, which is what makes Baidu exposed to trends but also value investments. If you want to check Peter Lynch's summary that we did of this book, check also the free course in the link in the description below. Huge growth expected there, more than 100% per year, with a big market cap ahead. And Baidu is the leader in China for now, with licenses, with everything in autonomous driving, in connections with the government, in smart driving, and so on. If we look at their Robotaxies fleet, self-driving, doesn't look really nice with this on top of the car, but that's a start and it is working. They have been already testing it. They are now collaborating with Geely on developing an EV autonomous drive car, and they expect to see it in the market in 3 to 4 years. Another advantage that they have, or investment catalyst, is Apollo, the smart transportation solution, Robotaxies. So they are really working to make, let's say, a software platform for autonomous drive in China, and they are really working on that. They have the minibus, valet parking softwares, so all of that. Then an interactive system, DuerOS, already installed in more than 1 million cars in China. So a lot of things going on there for Baidu. Also partnering with a lot of companies, so trying to create an ecosystem around autonomous driving. These are the smart transportation vehicles. Of course, we already mentioned the autonomous drive, level 4 autopilot, and this is how they plan to make that ecosystem with cloud, with maps, with infrastructure, with the data, etc., etc. If the market grows, it will be a big win. And how much the market is growing, perhaps this chart summarizes it all really well. This is what Baidu is now, and they expect the market to double there from the current market to 342 billion renminbi. Keep in mind they have 72% of this market. And then they are investing in things that will be there in 5 years that have a market of 5.5 trillion. So the total addressable market is 30 times the current market. If they just get 10% of this 5.5 trillion market, that's 550 billion renminbi in revenues, which is 5 times the current revenues. If they double on core search engine revenues, that's 200 billion, so 700 billion renminbi, that's 7 times growth in revenue. If they hit just half of that, that's still 20–30% growth over the next 5 years per year, which will lead to a great investment. Alright, let's take a look at the financials. We have the Baidu core search engine business. The monthly average number of users has been growing there, also the daily number of users, so that is positive. Revenues have, however, been stagnating a little bit, hit by COVID. Many expect a 10% jump here as the economy opens and people start traveling, etc. iQiwi, so declining number if subscribing members, so that was an issue also that pressured the stock, and the company is actually losing money year by year. If they can turn it profitable, of course it will be a big bank. However, despite the losing projects, the growth projects, total revenues are stable around 107 billion renminbi and very, very profitable with 22 billion renminbi in profits. That's 22%, 20% net profit margins, which is really, really significant and positive, which means that the core business is fundamentally sound. And if they can have the same profitability as they are doing these service software businesses, platforms in this market, then the investment will be really, really good. Cloud services are growing at 44%. Membership services for iKiwi are also growing at 14%. So as the economy rebounds, as the market grows, as the new growth projects gain traction, this could be a really, really great growth story. But perhaps even more important than the growth story is what we have there now. And at the end of 2020, there has been a $25 billion cash position. They are saying that they will not pay dividends yet, they will reinvest everything for growth, but still 25 billion on a 77 billion market capitalization is a significant margin of safety, and actually you're paying then 50 billion. If we deduct the debt, the net cash flow can be discussed from 6 to 12 billion, but I think 12 billion is the available net cash, which is again something very positive. This is a lot of details here with the balance sheet. If you want to read my detailed analysis on Baidu, you can just go to my research platform. I have put the Baidu analysis on preview. The direct link will be in the description below. It also explains why I bought this for my portfolio. It has about 35 pages, so you can really dig deeper here and then see how it fits your portfolio if you want to read. But don't stop watching the video. On top of the cash, there are long-term investments. They have invested 76 billion renminbi, that's about $12 billion, into other options, investments, equity investments. So really, really a lot of diversification there into the ecosystem. And to value such an ecosystem, perhaps it's better to make a sum of parts valuation than other. And I have done that. iKiwi, 7.5 billion, 56.5% stake. Investments, let's just take 66% of the book value. That's another 7 billion. Cash, 12 billion net cash. Cloud, 10 times revenues, it's 15 billion on average, 10 times revenues that those businesses are valued. Let's add up again 10 billion for Apollo. Some people value this at 0, some people value at 600 billion like Tesla. YY Live that they just bought, total 54 billion of the above, and the remaining cash producing machine is just 23 billion when you compare to the 77 billion market cap. They have been discussing with Alibaba and Tencent to sell the Netflix of China, but they didn't reach an agreement. But still, you never know. It is said that they want 20 billion for this, so this stake might add another 5-6 billion in value also in cash, so that's also something interesting. Anyway, if you look at this valuation, then okay, you can say I'm buying Baidu for 77 billion for a price to cash flow of 25-30 and getting everything else for free, especially as the business will grow. Just the search business is expected to grow at 10% per year or even higher. So everything else, the opportunities, the exuberant ARK investments, Robotaxies, and blah, 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 you get them for practically free. You don't have to pay those crazy valuations, etc. You can invest in Baidu that has cash, that has business, that has positive cash flows, and growth opportunities, and connections to China. And we recently discussed in the video of Bridgewater how it is time to look to Asia, and also Charlie Munger just bought Alibaba. Very interesting situation for long-term portfolio exposure. Tech, Asia, China, cash flows, value, cash, whatever. On the public stock research list, you can check all my other research, publicly disclosed research investments. Here we have Baidu. I have taken the free cash flows that they are making now, put them into a valuation, and with just a conservative 7% growth rate, I get to 35 billion in value. If they grow at 12% and then 9% with the 25 cash flow multiple, I get to 59 billion in value. All other growth opportunities excluded, no dividends included, so really a conservative approach to valuation. If we add that the cash and other is worth another 30 billion, then we are there for a conservative 10% return. Everything else is a positive upside. As said, you can download this list, and on my research platform there is also a similar premium stock list if you are interested in more. So we have already covered the investment thesis. Let's talk a little bit about the risks, because there are always risks. Muddy Waters, the short company, has made a short report on YY Live discussing how it is 90% fraudulent. The company has responded, and we have to see how will this end. They have some SEC investigations, but they bought it and they will try to scale on that. Maybe it will be fraudulent, maybe not. That's 3.6 billion in cash that are at risk. Also, Wolfpack Research made a short argument again, and they are a short seller, that IQ inflated its revenue by 27 to 44% and overstating its user numbers by 42 to 60%. Perhaps this is the reason why Tencent and Alibaba didn't buy, but this is something to look and cover for the long term. These are really nice reports, so you might want to read them, just search for them. They are also, the links are in my written report on the platform, which you can also view for free. Other risks, of course, it's China, regulation. They did some healthcare, let's say, marketing mistake in 2016 that costed them a lot of issues with regulation. So that's also something to think about. It is a developing, growing business. You never know when the profitability will be reached. For now, they have significant cash flows, so it is all an uncertainty, but that is investing. However, from a diversification perspective, it is a very interesting long-term, but also short-term play as the stock returns to value from the margin call selling pressure. To sum up, we have the sum of parts valuation, we have the cash flows, the China, also the China risk, so you have to see how these specific risks fit you. I have bought a little bit for my large portfolio, so in a 20 position portfolio I see Baidu as a fit. I have bought a smaller position. If it goes down, we'll add more. If it goes up, well, we have done well. Thank you for watching. Click that like button. Don't forget to subscribe for more stock analysis and interesting investment thesis and investment education. I'll see you in the next video.